Here we go, inflation picks up speed ahead of Bank of Canada interest rate decision. 2.2 million mortgage holders will face interest rate shock in next 2 years, again from the same CMHC report, which living standards are coming down hard. They have to. They can't keep this up. There is no other way. Inflation picks up ahead of Bank of Canada interest rate decision. Canada's annualized rate of inflation jumped to 3.4% in December, a re-acceleration that was widely anticipated by economists, but that will likely leave the Bank of Canada in no rush to cut interest rates. Basically, what this means is we're not going to get an interest rate cut. With the economy already stalling, we have interest rates staying at 5%, or possibly they might have to bring the interest rates up because inflation rate is not coming down. In December 2023, last month, we had 3.4% inflation, which is the CPI, and the CPI trim and the median were actually higher. So Statistics Canada said rent prices continued to climb in December, rising 7.7%. Of course, that's what you're gonna have when you have influx of a record number of people coming into Canada, basically uncontrolled immigration happening to create tax and voting base for the liberal globalists in Canada. The article says we continue to expect the Bank of Canada to tread cautiously and watch the data carefully, but for further slowing inflation to allow a pivot to interest rate cuts around mid-year. Okay, so they're hoping mid-year, but we'll see, because inflation might keep on going, and that's the trend we are seeing. Although the Canadian economy has stalled, basically, it's not creating jobs, wages are stagnant or going down, disposable income, productivity, it's going down, but inflation is going up. This is the chart. Now in 2022 we had a really high inflation rate in Canada, and it was basically in June of 2022 it shows it was at about 8%. Very high inflation rate. The Bank of Canada is not going to be able to cut the interest rate. This is going to affect most Canadians, especially the ones that are holding mortgages. Central bank officials have said they want to make sure that inflation is on a sustainable path back to their 2% target before considering rate cuts. Yeah, right, you guys. We're not going to see 2% inflation rate coming up. I doubt we're gonna see that. We are in a period of inflationary period in Canada now because of the policies the globalists with Trudeau liberals did during COVID. They were printing money like crazy. The debt went to all-time high. Most economists are basically saying that this is very troubling, that we have this type of inflation spike in Canada. Now let's look at this chart, key inflation indicators and the target range, and we can see that in 2022 CPI went really high in Canada in June. And let's just look at it closer. It went really high, it spiked, it went down in June 2023. Prices started stabilizing, then went up, and we're seeing now they're starting to go up again. So this is the trend we're seeing in Canada right now, and we should mention hyperinflation. We could see a mini or the tip of hyperinflation happening in Canada. If these policies continue, if printing of money continues, and the debt keeps on going up, we're gonna see some issues as far as hyperinflation goes. The basic economic explanation of hyperinflation is if economic output continues to stagnate or shrink, which is what we have in Canada now, We have stagnating economic output, and the inflation keeps rising. Companies charge more, consumers pay more, and central bank prints more money. A cycle of increasing inflation rates occurs, leading to hyperinflation. Guys, Canada is in a cycle of inflation now, and the only way to stop this is not to go back and print more money and decrease the interest rates. Real gross domestic product of Canada, we can see how the production of real GDP has gone down. Now, this is during COVID, this big spike that went down because of the liberals and the globalists that shut down all of Canada and put everybody into prison. This is what they did to us. And then after that, after their opening of the prison, we ended up having obvious growth in GDP. But as we come here now, we can see GDP in Canada is slumping right here. This is in 2023 quarter 2 and quarter 3. We have slumping GDP in Canada. And this is the productivity level of a Canadian worker. And we can see productivity level of Canadian workers has also gone down. One of the issues that's affecting Canada now is obviously the uncontrolled immigration policy. Canada is caught in a population trap for the first time in modern history. It needs to limit immigration to escape it, says economist with National Bank of Canada. What is a population trap? A population trap, according to Oxford Dictionary, is when the population is growing so fast that all available savings are needed to maintain the existing capital-labor ratio, making any increase in living standards impossible. How do you increase the savings when most people in Canada are in debt? You can't increase savings. So basically what's going to happen in Canada, if these policies continue, which they will, living standards are coming down hard. They have to. They can't keep this up. There is no other way. Living standards are going to come down. If they don't stop printing money, inflation rates are going to go higher, and they will keep on being persistent. Canada's population grew by a record 1.2 million in 2023, a staggering amount when you consider that the next biggest surge was when Newfoundland joined the nation in 1949. Basically, this is one of the biggest surges in the population. And also, from a global perspective, Canada's population growth of 3.2% last year was 5 times higher than the average of OECD nations, the highest level in OECD nations in population increase due to influx of immigrants. Now we're going to look at the Canadian housing market again. As we have been mentioning in my previous video, we know that sales in Canadian housing market have gone up. National home sales jumped 8.7%. This is insanity given the debt levels, the interest rates, but we're having increase in home sales. So we have productivity level that's lower in Canada. We have wages that are basically not growing. We have unemployment that's going up, but the home sales are going up. They are forecasting for the national average home price to rise 2.3% in 2024 from the 2023 average $657,000 to $694,000, the average price of a Canadian house coming up in 2024. Let's look at the CMHC risk and vulnerabilities to the housing finance system now from their assessment. They say overall mortgages in arrears are stabilizing at historically low levels. Other delinquency indicators, however, show that an increasing share of Canadians are struggling with their debt payments. Basically, we have people that are struggling with their debt payments. In the first 2 quarters of 2023, more than 290,000 mortgage borrowers renewed their mortgage at a significantly higher interest rate with Chartered Bank. The resulting increase in their debt servicing costs is putting financial pressure on these borrowers. The decreasing ability of Canadians to make their debt payments is becoming a more significant vulnerability for the housing finance system. A high debt to income ratio is one of the issues. 179%. This is pure insanity. Debt to income ratio is 179% in some household mortgages. Interest rates that have more than doubled. Also, while overall mortgages in arrears are stabilizing at historical low levels, now arrears of other credit products should suggest that an increasing share of Canadians are struggling with their debt payments. What's happening, guys? Basically, what we have here is people are not paying other debts such as credit cards so they can make payments on their mortgages. 2.2 million mortgage holders will face interest rate shock in next 2 years. Again, from the same CMHC report we just looked at, the number is actually 2.2 million people. That's a staggering number of mortgages and debt slaves that will be facing a shock when they refinance, and they have to refinance at a new higher interest rate. The proportion of mortgages in arrears, those behind on payments, for loans valued at $400,000 or more has been on the rise since the third quarter of 2022. Now, the trend is particularly visible among mortgages worth $850,000 or more, CMHC says. Obviously, people that in brisk and good times were lured into these neighborhoods to buy these luring cardboard boxes, were lured into these expensive houses, and now they have one way in into debt slavery, and if they can't make the mortgage payments, they have one way out into homelessness. Looming interest rate shock. A separate article on Thursday from CMHC senior specialist of housing research put into perspective the impact of Canadian homeowners and the economy at large from the looming wave of mortgage renewals. An estimated 2.2 million Canadians will face interest rate shock in the next 2 years they renew their mortgages, representing 45% of all outstanding mortgages in the country. This is insanity, guys. 45% of mortgages in Canada will come up for renewal, and 45% of all mortgages in Canada that will end up being renewed will be at the interest rates will be at a level that it will shock these people. Now, the total amount of mortgage loans set to be renewed in those 2 years is valued at $675 billion, or roughly 40% of Canada's entire economy. Total insanity. That's what's happening in Canada. Debt slaves are being pushed into more and more debt slavery, possibly homelessness for 40% of Canada's homeowners. Each household is expected to see an average increase of 30 to 40% in monthly mortgage payments. This is total insanity. Cumulatively, that will work out to an extra $15 billion in mortgage payments annually across the country. This is how you rob the debt slaves. Now let's look at median after-tax income of families and unattached individuals in 2021 in Canada. I like how they say unattached. And in 2021, that median income has gone down 1%, almost 0.9%. We can say that's a COVID shock. But the most interesting number is here. The number of persons living below Canada's official poverty line increased in 2021, and we can see persons from 18 to 64 years is one of the largest population that's in poverty in Canada. Almost 8.2% of persons from 18 to 64 years of age live in poverty in Canada. This is staggering. Persons 65 years and over, 5.6% or 383,000 people live in poverty. And all persons in Canada, 7.4% live in poverty in Canada in 2021. I'm sure it's higher in 2024 now. This is insanity, and please pay attention to the insanity that's happening, and thanks for watching.